All right. Alrighty. Let's see this. All right. The GME's tomorrow. Wow. That's pretty much going exactly as I wanted it to. I'm a little unsure about this, but I like that it made a higher high. That's good. And this one. Hey, what's up? Honestly, I think both of these are. I hate to say it's like the worst case, but it kind of is like my least favorite positioning. They both look like they could have a pretty gnarly hook to the upside, so it's kind of a bad situation to be in. Hey, probably gonna start working on fixing this Apple chart a little bit. There's a lot of possibilities here, and sort of already made a decision, so I'm gonna try to work on off the decision that was made. It's very close to what looks like a breakout, but there's a problem with it, which is the this move right here. It needed to hold above the top. You know, that's not really an optional thing. So I'm very concerned because it didn't hold over that top. Needs to hold. Needs to hold over that top. Hey, what's up? How are you? So this is a less than ideal situation for Apple. Again, it's like pieces of it are correct, and then other pieces, to me, this is very distributive looking in the nature of like how it kept trying to advance and kept backing up. It's like every time they try to advance above this 203.85, it's just failed to hold. You can see pretty clearly the 1, 2, 3 wicks, the three kind of generally wicks. They're just 1 to 2 candles. This is a 1 hour chart, so these would be 2 hour periods of time, 1 hour period of time. This is the longest it held, and it actually looked like it might even go because it pushed higher than this top on an advancement, and then it just kind of fell flat. I really, 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 really want to be. Oh, good. I'm glad you're enjoying the sunshine. Yeah. Good morning. Well, it's not morning where I am. It's right afternoon, but it might be morning if you're on the West Coast or beyond the Mississippi, I suppose. Not really sure. Or somewhere in the country. I guess it could be the morning. Yeah, it's strange. So, like, this is the model that I had, this blue area. I haven't changed this. So what I thought was that it would advance here and back up and then go again. And it did advance. It backed up. Never really did a deeper backup. It went ahead and made a higher high. So it did make an advancement. That counts. It's not like that didn't happen. I mean, it did happen here. But the problem is this area, there's just a kind of a huge amount of oh, it's PM for you. It's late. Yeah, it's just a huge amount of, I guess, resistance in this area. There's just a lot going on for Apple. And the reason I'm looking at this is because, I could read this as an LSPY. I don't right now because it didn't push below the range. It did, however, dip below this ice level from early on, which is this yellow trend going up. And this is part of the problem that I have right now. It's got a bit too much going on maybe on this chart. You get a little bit lost when there's too much going on. But this pink marker coming down, it is locked in, and that is the outermost creek. And you can see it's advanced it 1, 2, 3 times, but failed to break out. So it's really struggling right now, I think, to find its footing and make a case for the bulls. Unfortunately, weirdly, I suppose, in some ways, this is very odd because we actually went, it's just, if I had to guess, I think that this just hasn't made a spring. So right now it's basically like created an auto reaction, and then it's doing a reaccumulation, in my opinion, because it's pushing up. The auto reaction didn't have anything particularly negative about it once it hit the top. So if you were looking at this as a reaccumulation, you might be tempted to think, well, it came up on low volume here and then went higher than it should have and dropped, so it looks kind of distributive. But I actually don't think that's the case because it made higher highs all throughout, which is traditionally not what you see in distribution. I mean, if you're looking at it like a bear flag, you might see that, but then it curved back down away from the main trend it broke. So it broke out of this trend. It seemed to find support on it. But the reason that I'm like skeptical and I think it may need a spring is because when it came down on the 22nd or 23rd of May, Apple pushed down low, but it made a higher low. And then it bounced up. It's almost like it hit like a higher support. There was a hidden divergence on the 4-hour right here, which typically could be bought back up and break out. And then we've got this, what appears to be like an M cross. There's a series of jumps trying to be made here. There's a lot going on if you look at the nitty gritty of this area. The reason I'm so interested in Apple is, I think, obvious. It's like 20% down on the year. It has not recovered, and we're 6 months into the year now. So it has been going down essentially if you look at the whole picture, right? Going back to January here, 2025, it's just basically been stuck in a downward trend, which is unlike the rest of the Mag 7, which have all but recovered their entire losses for the year. So there's a certain kind of delay here that makes this very appealing to me, because while the other stocks to me seem like they could be in a place where, yeah, we might get a little bit of an advancement and they may continue to the upside even. We were looking at SPY yesterday, and the S&P 500 had potential that it could kind of maybe ricochet in this area a bit and then potentially even run later in the year. Apple's an interesting one. It has problems because most of their manufacturing is overseas. They had pledged like 500, I can't remember, it was like 500 million or 500 billion, who cares? Some huge amount of money to do US based business, but they refused to push all of their manufacturing back to the US because it was going to cost a huge amount of money to make something like an iPhone. In terms of their profitability, the reason that people say that is because they had like a really strong trajectory for a while, and their price to earnings was appealing, but a lot of it had to do with profit margin and just the ability to make money, and they have a strong user base and all this other stuff, and a pretty decent business model that's constantly evolving, their products and stuff. So they've been a really good long-term trade for most people, which is why they are as strong as they are. The main issue is that their profitability has largely plateaued. It's kind of going into, you can think about it like an inverse parabola, right? So it's not that they're not growing, it's just that they have slower and slower and slower growth. It's kind of like this, right? So you have this growth of a company that's kind of reaching the pinnacle of, and it probably has already, unless they do something new, which I'll get to in a second. It's kind of reached the pinnacle of their ability to turn more revenue. So they've largely been criticized for their inability to create these huge profit margins and giant growth stock whatevers. I think it's a little bit unreasonable, for one, because when you look at something like a Microsoft or even an Nvidia, there's periods where there's been plateauing, and it hasn't really meant that the company isn't a good long-term hold or suddenly it's not valuable. We could argue about Apple, whether or not it's worth what it's worth at the valuation that it's at, or whether or not its growth potential is equivalent to that of other Mag 7. I get that. But in terms of like a sustainable uptrend, upward trajectory, it hasn't really faltered. The main reason it faltered this year was twofold. One was the tariffs. So again, because most of their production has been in China, the tariffs have very much been a big problem for them. They stand then to benefit the most of all of them that I've seen. Maybe Nvidia is kind of second there, but of all of them, I think that they stand to benefit the most of the top 7 because of how much they rely on China for manufacturing from a trade deal. So they stand to benefit the most from a good trade deal with China. It would be by itself okay if the Trump administration, and specifically the president of the United States, had not called out Apple and threatened to tariff them specifically. And I know we've gone through this before, and I don't want to have a big debate about tariffs, but on a random Tuesday here, but like that's a big deal. Basically, you're threatening to just levy a tax on an American company that does production overseas because you don't like that they're not moving all of their base of operations. So it becomes a matter of principle, I suppose, if you think that they should or shouldn't. But it's a globalized world, a globalized economy, and up until this point, they haven't really had that issue, right? And there wasn't a president threatening to tariff their products and make it unprofitable. Well, that's a huge problem for shareholders. So that's one issue. And then the second issue was their AI rollout. They had botched it up. They said it was going to come out, and then insider information kind of leaked, and they basically were dealing with like hundreds of bugs and problems like every day or something ridiculous. And so they delayed their release of the AI. So they basically missed out on the big AI boom. I don't see any of that as a problem though, because in the end, when you've got all the other tickers that are blasting off and then kind of melting down, and they're melting down pretty hard, and then they're having this kind of soft recovery back up to the top. You guys are like, it's not soft. Well, volume would say it's kind of soft. The volume hasn't been amazing on this recovery. And I think long-term, we may still need a bigger correction. I've talked about that. Point is, I see it as an opportunity because I like contrarian plays. I like the idea that a deal with China would probably benefit them the most. I like the idea that they actually still don't have great news yet about their AI. So if you were like, well, I missed out on this or that, on this big boom for NVIDIA and all that, well, don't count them out just because they've not been doing well, you know? Sure, like Apple they may drop the ball, you know? You can't predict that, but you know, if they drop the ball, I don't think their market cap's going to go off a cliff here. I really don't. I think 160s is probably about as low as you're going to go for the time being. But I genuinely think that like this is a really good play because the potential for upside here is huge. And I talked about this previously. There's a real potential here to go to near 300 within the next 6 months. It just depends on how this breaks out and whether or not it kind of fulfills certain requirements. It's already pushed across the widening. So at this point, could it retrace back down to like 195 and fill a gap locally? Yeah. Could it have like a localized spring here and drop to 187 and still be bullish? Yes. in my opinion, because if this sets up as an accumulation, and I think I could argue that it is, I think you may be able to argue it's not, but I honestly think it is. Even if this dropped low for a spring, it's already pushed out of this other widening, which to me is a huge deal. Like, I'm a big fan of basic Bolkowski technique and probability. And the probability is pretty decent, right? It's like it's more than 50%. Let's just put it that way. You're not flipping a coin. The probability is very decent that this is going to return back to the widening at 240 at the top there in that breakdown that occurred, as long as it breaks out here. Now, it's reached this kind of weird moment of like, well, we've hit the wall twice and we're having difficulty going over. It's waiting for something, good news or bad news. With the Trump to China talks that were going on, I figured that's probably what it is. And then there was a lot of other stuff that people were like disappointed with Apple and this like tech conference and all this other stuff going on. It's one of those things where, and I've said this before on here, and I'll continue to say it, I'm not ever like 100% sure on anything, right? But I do know a good setup can oftentimes run contrary to what the media is saying, what the news is saying. The news has been largely horrible for Apple. And we just talked about all that. It hasn't really changed. Like, there hasn't been some massive good news just yet. Well, I don't know anything about that. All I know is that their AI was having a lot of bugs, right? I'm going to leave it at that. And then they didn't roll it out. Siri, right? The updated Siri was supposed to be this big deal. I think it's less of an issue than what people are making it out to be, is what my argument is. But I also think that this is one of those situations where this is like building out to explode to the upside and it's just failing to do it. And now we're consolidating. I could see a drop coming, but I think this is like one of those slingshot moments. I really do. And I'm going to stand by that, because while I don't think that this is necessarily the only trade that's out there that's good this year, this is one that's very delayed. And so I'm going to cover it on the channel as far as I can, because I think it's a really good trade. I wouldn't be looking at it if I didn't think it was. And also, I'm in it. And I cover stuff that I'm interested in, that I'm in. So I'm not going to apologize for covering it, even if you don't necessarily like the trade or like the company in that regard. And the same goes for something like a Starbucks or an AMD trade. My AMD call options are up like 60% today after trading from this drop here at like 110. I said I was going to buy back in if it dropped down to 108, and it did. And I didn't buy it. I may have not bought it right away. I think it got it like 110, and it came back again. But it's up like 40%. That's a good trade. I don't care that it's not a meme stock or a penny stock or something like that. Like, I like it because it was a good trade. It's a good technical setup, and it's proven to be correct when you make money off of it. So I traded AMD. I'm not going to like shy away from that. Long term too, August call options. I tried to trade Tesla here off this bottom, and I talked about it in the Discord group, saying that I'm pretty sure it's going to come back to like 320, and it looks like it's on its way. It's about to get there. It's at 320 now. I think I said 327 or something. It looked like a good, easy rebound. This is almost always runs like 10% if it makes this big of a drop, and it has. Is it the best trade in the world? No. I actually kind of lost money on it because of my call options being a little too short-sighted, but it's okay. It was still a good call out, and I think the same goes for like Starbucks. I don't think anybody here like really particularly cared that much when I brought it up, and I didn't care that much until I saw the chart, and I was like, yeah, this looks like a good trade. The problem with Starbucks has not been the motion itself. When I started trading it, I was down here. I traded 95 strikes back in April and 85 strikes. I got out already and took profit, and then I bought in again when it came back down to 83. Now, here's the biggest issue that I have with Starbucks is that you would think that this is a 10% run right here. You would think that from an option standpoint would be exploding, but it's not. So I don't know exactly what's going on within the options chain that's causing this to happen, or maybe it's just because of the way this trades and I just not used to it. Every stock is different. You can't lump them all together all the time. But for whatever reason, every time this thing gets to like 30 to 40% on the options chain, those 95 strikes, we hit $92, you know? So you would think like, oh, I bought in down here. That's a 10% move. You'd think that'd be a huge move. I mean, it's not that different from like the AMD trade I was just talking about. It's pretty much the same trade, right? And AMD's up 50%. But for some reason, every time Starbucks gets to like 30% on those call options, they get like crushed. And then they go back down to like 10%, and then they run again and go up to like 30%, and then they get crushed. It's not accumulating momentum, and I don't know why. So it just is what it is. Something about the volatility on this isn't working to my benefit, so I don't know. I'm not very happy about it because I've had to get out at like 20 to 30% because at this point it's like, well, it's almost already to 95. And I'm like, I feel like you think about it reasonably and you're like, well, yeah, I mean, it came back down again, but reasonably speaking, like it must have been pretty bad sentiment to think it wasn't going to go. And obviously I bought in too early, came back down again, but still that's a big move. And it's like, did not get a lot off of it. It's kind of frustrating to me because I put money into it that doesn't go anywhere else. I'm not mad about it. It's just not my favorite trade. I could have made 20% overnight on something else, you know, and been done in a day, as opposed to waiting like 3 weeks for it to just keep getting crushed down. So it's kind of a bummer because I really like this trade, and it was an easy trade. I mean, it was perfect, essentially. You don't get a lot of those, but like I figured it would, when I called it out, it was up here. I thought it was going to come back down to 83. And I mean, I had the marker set up. As soon as it hit 83, I bought it. So it is what it is. Again, can't really control that. There is a gap going all the way up to near 100. My calls are for the 20th of June, so I got out about half of them already. And I'm not really expecting much just yet. I'm going to wait till tomorrow. If I don't see a big explosive move tomorrow, I'm probably going to have to just kind of peace out on them because we're starting to get a little last minute. It's like a week out after that. I don't like that. So, because then in a week's time, it'll be, you know, the 18th and it'll be about to expire. So I'm going to have to just kind of deal with it. If it doesn't run this week and doesn't make this move right here, I'm probably just done with Starbucks for now. But it was a good trade. I'm not angry. And if I had kept the calls that I got way back here, I'd probably be even better off. But I had traded them short term, so I'm not sure it would have worked out anyways. I'm not talking a lot about AMC today, and I'm not talking a lot about GME today. And it's probably going to maybe irk some people because they're like, well, GME's earnings is tonight, you know. Yeah. I got to admit, this is probably like my least favorite setup. And I was thinking about it and I'm like, what I said about a week ago was that I did not want it to not advance here and then come down below and risk a hook. And both AMC and GME are in the same spot in that regard. GME looks a little bit stronger. And I mean that like a little bit stronger. Okay. Because even this push down right here, it didn't go below the bottom. It's possible because it came back down. It looks almost exactly like what I had drawn out on the yellow path, which is kind of interesting. Which is, I mean, honestly, it's a good thing, but it's also kind of, all right, you know, but is it going to finish and be strong? And it did push higher here, which is fine. I'm just nervous because it's currently in a spot where you could have an upthrust and then fail, unfortunately. It's just like it has not made the appropriate move like in a finito kind of way. So I don't have that as an option here, but it's an option. And the same thing with AMC. We talked about it more on AMC that like it's very possible that there's some kind of a gap up and you open up at like 363, right? You're above the top and then you just melt down and that's that, you know. You're going to have to deal with some kind of recovery effort after that. It's not likely just going to rocket. There are weird things that happen sometimes, but in the event that it just kind of hooks here, I can't really make any other recommendation or any other kind of assessment. I just have to say it is what it is, which is it doesn't look particularly good. So if I were looking at this from a helicopter standpoint, it has held up the overall trend. It kind of came back down on top of it, but again, it didn't make an advancement. So just like yesterday, nothing's really changed. There's nothing new here. This is the same exact range we were in yesterday. It did not make an early advancement above 363. And again, it has to come right above 350. This is a super important, I can't even stress how important that particular cross, those two red lines are right there. If it hooks here, it's likely going to be pretty bloody, like in terms of downside. This is a really bad place to get stuck underneath. So likewise, you might say, well, what if it reverses here? Well, in a situation where it looks kind of bearish and then it suddenly reverses, it's usually one of the stronger bullish setups. So certainly that could lead to something pretty huge, right? I did a measurement on some of the topping here, and I think it ends Wednesday after lunch. So we're talking about tomorrow into about midday. My schedule is such that I'm probably not even going to be able to stream. It's just the way that it is. I might be able to stream first thing in the morning for like an hour, but then I'm going to be heading out because I got stuff to do in the afternoon. So kind of a bummer, but that means that you're sort of on your own, I guess. And I wouldn't take this too seriously, but I do think that it was a reasonable estimation. And what we did is we looked at the build out here of the cat ear and the build out on the bigger picture, and they both lined up to be about noon tomorrow. And then we started kind of seeing that as a recurring theme. This is a double wave with a smaller wave in the middle, same thing. So you've got this kind of sense of impending something, right? Something's impending. Something needs to happen. This just looks really like really crappy to me on like IWM. So I'm not very happy that I'm seeing a lot of kind of weak volume pushes that are narrowing up. They look bad on the whole. And I'm not sure what to think of that for IWM, which is your small caps. I haven't really checked out the RSI, so probably could do that and just see if it looks really bad. And it's coming into a top again. We'll see. I mean, it definitely looks like the kind of motion that could have a big pop and then drop, That sort of makes sense based on where it's at. It's at the ceiling. This is one of the predicted kind of areas we figured it'd probably come back up to before. All of this right here happened earlier, which is kind of funny. You just like move it over. Usually like timing's off. It all happened, but it happened pretty fast. And obviously, like where it's at right now, there's nothing particularly good about having, like, for example, this divergence on these tops. It's pushing up really high on low volume, and that MACD is still like lingering behind. So if it makes a top, it's going to be divergent, immediately, and that's going to look really bad. So it'll have a pretty nasty drop after. So maybe that's part of this. As part of this big push with this big drop, this big push with this big drop, I could see it all kind of working together to have some kind of a big news moment, and then have maybe a sort of a reactive drop that kind of push forward. In some cases, I think it will reverse certain stocks' price action. In other cases, I think they'll probably find support. So, yeah, I'm not convinced it's going to be all bad. But it would not surprise me to see this kind of like rocket again tomorrow, and just look at where it's at. Maybe it has a dip first today, but you could definitely see how that could happen. And if that happens, it's sort of like the last big leg perhaps, and then you might have a bigger recovery down. And I've had this kind of on the chart for a while. Now that it's gotten here, I'm like, well, it did come down low, but it never came back below that trend. So again, it's sort of missing that that bigger retracement. It never happened. And that's, again, you might say, well, that's good, right? I mean, it's just going. Not exactly. You know, in the past, when it's gotten to these points, you've had some pretty big moves, and they've gone huge at times. You can see this is like a huge, massive move to the upside right here. That's potentially what we're talking about happening right here. But at the end of the day, like, this is a huge gap space. So, and it's coming, in my opinion, coming to an end. More than likely, sooner than later. If you look at it like a wave, that's July, so that's about a month away. So you have a pretty high probability that we're going to be in like a topping action, and then coming back down into July and August, which makes sense. So I'm really starting to believe that the market's going to do like one more like gasping push, and then we're probably going to start seeing a pretty decent market turnaround and have some correction until August. That's my assessment, I think, on the whole. So even if you have like a decent push like on SPY here, I think there's a good chance you're going to start seeing that pullback. I did a lot of weird stuff on SPY yesterday. I don't even know what this is. But we were talking about like maybe a decent push here and then backing up. It may be a little bit different on the S&P 500, but we'll see. iPhone production cost is $10. That does not sound real to me at all. That sounds made up. Where did you get that from? I mean, the chips themselves can't be $10. There's almost no way. Like, I can't imagine them buying computer chips for $10 for iPhones. That doesn't make any sense to me. It sounds like a... I don't know why you even said that. If you're talking about, like, just the cost to make it, like, to pay to make one, maybe that's, like, labor or something. I don't know. Okay, but... low market cap. I like, yeah, liquidity as well. I don't like getting into a trade and then not being able to get out of a trade. So, now what's going on today? We went from 35 people down to 15 people all of a sudden. What changed? Oh, you stopped talking about AMC. So weird, man. GME earnings. I know GME earnings is going on, but what is there to cover from a technical standpoint? Like, what else is there to cover, I guess, you know? That's not true. I know. It's more a comment on like sometimes I'll say something that is controversial or like something like that, cause people to like leave. I just like to have my pulse on it. My finger on the pulse, I should say. Not my pulse on it. That's weird. It doesn't matter. It doesn't really matter that much. I just find it odd when the numbers drop like incredibly fast. Like, there usually is a reason, so, but I'm not sure what the reason would be. You're not talking about GME, so. I don't think it's going to go straight to 50. But you've got your DD, I've got mine. I don't even think it's going to hit 50 till like way later. I'm pretty sure that it's going to get stopped at like 40. I do think that it's possible this has a strong reaction up or down, like about, so the up down is usually about the exact same when it comes to earnings time. So the implied move is usually built in. The implied move here is a spread of about 17%, which is maybe 8.5% either way. So my guess is that if you were to look up how far is it going to move based on options, it'd probably say 8.5% or 8% either way. There's an implied 8% move here because that's the range that it's building out. But that's already there in the technicals. Like, I don't need the options chain to tell me that, so I'm just going to put that out there. Like, it's probably going to have an 8% move. That's what you'd want to know if you're playing volatility and you just want to play a swing here. That's potential for 8% move, I think, either way. But in terms of like upside after that, this is a macro S curve, but it doesn't go to 50, it goes to 40. And the S curve, within the S curve, really only would have to stop probably at the top here at 35 in SOS. Genuinely think it could take quite a while because I have it out until the 16th of July and probably again around that, the 11th, which is when that other stuff's going on. There's a lot that has to happen here. So it has to make a jump over the creek right at 35. Could it go just blazing past that and all the way up? Yeah, but you're basically suggesting then from a technical standpoint that it's going to ignore every other. I mean, you'd be saying it's going to ignore every other top here, which doesn't make sense. Thus far, there's been nothing but resistance above 34 up to, frankly, 80, 65. But especially like 34, about 32 up to 40, that's been the shelf for resistance. It's pretty unlikely that it's just going to blast through it in one go. And especially given that there's a creek set up right here on the top, to not kind of result in some kind of reaction here and hold that and push doesn't make sense to me. So I can't get behind anything that doesn't make a lot of sense to me, even if the numbers themselves aren't that unreasonable. Like $50 is not that far. There is a macro creek coming down right here. If you use extended hours and stuff, there's a macro creek coming down to like 50s, but like, I don't know. This is a big resistance area right here, y'all. Like, this is no joke. Right there. It's not going to be, in my opinion, like a one-off kind of push. I think it's pretty likely that this is going to get us up to maybe 40, and then we'll back up and we'll see if we can do the last leg at a later time. And frankly, and I've said it before, I'll keep saying it, I don't see this as a problem. If it did advance, I don't see how it would hurt it to come all the way back down to even like 26. The only thing that really hurts GME at this point is dropping through that like 26 area right here, because this is a rising, not really a rising wedge, but it's like more of like what they call a symmetrical wedge. And the ice level's already been pushed twice, and it can't go back through that again, which again, I think is going to lead us to about that $26 on the area of impact, which is probably going to be, if you were to go down there, right around here, so 25, 26. If that happens, it's bearish until it's proven otherwise, unless there's a change of character, right? But in terms of upside, like, things rarely just go straight up. I don't see GME earnings typically doing that. Most GME earnings have been like pretty moderate to mild reactions up or down. We just have very little proof that an earnings causes like a massive reaction up. Most of these are actually downward reactions, like you're running up into earnings, then you have a downward reaction. In some cases, you're like near a top, like this one, for example, and you have an extra push. That's more or less what I'm imagining here. Like this kind of a scenario where you've kind of had this one push, now you're going to make a second push. One push, I think there's a second push in store. That's the reason, part of the reason why I think that's possible. But most of the time, not all the time, most of the time, you do not have that. This is one example where you have a massive push after earnings. But I say almost every other time it's been mild to either like a mild push up or a drop down. Most of these are actually sell-offs right after earnings. Yeah. Even this one, which was in a really bullish time, was a sell-off. So I don't think I can get behind the idea of a rocket to 50. But I do think that it could probably get up to the 35 again in the short term. And then, again, it could be a matter of a chop here or whatever and then head back up. I think that's likely. We've already sort of talked through that. So I don't feel like there's anything new to talk about when it comes to GME and AMC right now. My biggest concern, like I said, is that this is still like not finished with downside, and you could get into the sign of weakness realm down here for a future date drop later. But ultimately, like, yeah, it's jumped the creek, but there's nothing really there supporting it yet. It's kind of basically just hopped over and just chilling out. And it also hasn't come above the top. So you don't have confirmation of a breakout just yet. It makes me really nervous for obvious reasons because it could easily become a double top that drops. I'm not living out of a sense of fear here. It's more just, we had already talked about this like 2 weeks ago. And when we got to this setup, I knew that probably the worst case scenario was that you have some kind of drop of the main trend and you have to wait and see. And that's exactly what happened. You have to wait and see. So we got this early sign of weakness. We failed to make a higher high. We drop and now we're waiting and seeing. It's like we're pretty much on the verge of a big pump and dump or a dump and pump. And I don't like that. The only situation that's really, really good here is a push above, for example, on AMC, a push above 362 with support that then, I mean, may have a chance to continue to 390 up to potentially 460. And that's that. And I'm not going to go through this all over again, but it's not my favorite setup. I'll just put it that way. I wouldn't have minded maybe as much if this had just come down. Like if it was already down by this time, I'd be a little bit happier even. I wouldn't even mind if it dropped into close, to be honest. From here, it just kind of drops off the face of the earth would be fine. Because ultimately, like if it's going to do something that's spring-like, I'd rather it do it before the end of the day and just be there, you know, ready to react. I don't like the idea of pumping up on some kind of a false hopium that this is going to run. That always makes me most nervous. More often than not, that's ended in disaster. So for AMC, it's 362. For GME, it's coming up above this previous top, which I believe is this 3113 level, maybe through about 3073. And those are areas that I could see. Those are areas I could see some maybe again that upthrust problem if you were to have like a fake out. I know it just sounds weird to like want to go down, but it's better for us in the bigger picture to just get that drop and have it be like a strong spring. And it doesn't even have to, I don't even necessarily mean it has to go low. Like for GME, for example, I had this on the chart, I think a week ago or whenever it was, about Friday, not a week ago, but last week is what I meant to say. And I was thinking if it came up and jumped over this region and made a higher low and then advanced, I was like, this could be a pretty comfortable place to take off. So this is not a bad thing for GME. It's just it hasn't made that move ahead of earnings. So it makes me nervous. I'm like, well, what's going to happen, right? You don't know. And it's probably going to be in extended hours, which is hard because most people, I can't trade it. There's a lot of people can trade it, but a lot of people can't. So it's like you end up in this situation where you're kind of waiting for the open and so much can change. You know, you might see something really bullish during extended trading hours in the evening, and then in the morning, it's just completely reversed. And it's just not a good feeling. So I wouldn't have minded if this had went ahead and come back down again and hit low. This could go down and retest this floor. It actually looks like a perfect 50% retracement back to that floor. And this is the floor that we hit here. And I don't know why it's where it is. I think I grabbed that one right there. And that's at 2935. So you could see how like an S-curve here actually would be greatly beneficial, because you'd come back down and check that creek right into close right here. This was the area we built out based on two downward creek motions. And I said this is the area that needs to cross up and over. So it needs to come up and over. It looks a little iterative. So you see this motion right here where it came up and then it has this big burst, but it didn't make a new low. Instead, it goes up again and creates a big burst. It's kind of like the same thing, perhaps, that we're seeing on a slightly larger scale. I'm talking about iterations right here, where it has this downward motion and then it has this big burst. So it could result, again, in a lower motion, but I actually think that might be good to come back again to that floor, because if this is a spring and this is just a retest, that's great. It would not be bad to retest 2935. So I'm not going to say it has to necessarily at this point, because technically kind of did a back test on it here. It was like a really tiny back test, but it wouldn't kill it either. The only thing that would be bad in this case would be dropping below that in a way that doesn't support like a spring thesis. So that would be problematic. This obviously didn't happen, which is nice, but we were talking about how if it went too high too fast and it didn't make this backup. The reason that I had this red thing on the chart drawn is because if it goes too high too fast and it doesn't make the appropriate backup, then that could mean that you need to make that backup later. And usually that's also a distribution signal. So if it just blasts through here and it doesn't make the checks, doesn't create new supports and resistances, then you would have this risk of like coming back down in a really extreme fashion to check this line right here. The good news is we did not do that. So we did come across, we did test it twice, and we held it. So the good news is that's been checked. So this idea of like a big push with this massive drop probably isn't as valid, right? And it wouldn't be as reasonable. However, we are in a situation again where we're kind of testing the waters on this trend, which makes sense. And it would not surprise me to see it come down again right here. And the other problem is that when I drew this out, I had it coming down to retest and this is an actual test on Wyckoff, where you come back and you check the support, not just where, the spring goes beneath it, but then you would come back and check that support and make sure it's support. So, yeah, I don't know. This is one of those things where it did have a higher buy-in. It did look like it held support. It was like an M cross, so it jumped up and over. There's nothing wrong with that in and of itself. It looks pretty good. And by the way, right, when we look at these things, we can go back and we can look at previous examples, and we can see times where that jump has been fine, even if it comes back like right here. This jump went up, came back down pretty far. Granted, this makes a higher high, and this did not make a higher push than 30.95. It did come above, I believe, the 30.58. Nope. Take that back. It only hit 30.58. This was a high of 30.60. So it's still not like committing to it. It's a really frustrating chart. It's like not committing to a reversal. Bulls should have pushed it up farther there, and there's really low volume. But like I was trying to say, to be fair, this kind of model of like big push and then sliding in sideways, it's very similar to what we did before previously back here. We had this like big push and then we slid in sideways. And what's really required is that this guy, when it jumps the creek, again, finds that support, I think, in continuation off that creek jump. So I'm not going to like sit and say that, oh, it's all bad. I just don't see the advancement, and that's a problem. Even this right here advanced. It's a problem when it doesn't advance, It's like, that's an advancement right there. And then it backed up. this did not do that. So it's like on a small scale and just hasn't done it. And I don't know why. Maybe it's again because they're going to drop it lower first. Or maybe it's because this is distributive and they're just going to do an up thrust. Maybe it's a bear trap, but that's a tough one to say. So you can't really call out traps very easily, especially with this low volume. There's not like a lot to go off of. So right now I'm like cautiously optimistic, and I think there's reason to be cautious because it's not quite proven itself to be bullish. This is probably what we should be watching right here now. Maybe around 29.06. I know there's a gap, and we did do an S-curve that pretty easily led down to that gap at 28. 28's not a big picture problem, so I'm just looking at this locally. And I'm saying that locally, this has not actually made an advancement, oddly. So it needs to make that advancement. It hasn't done that yet. So a couple little problems, right? A, it did check the creek, but it didn't come down low enough to retest the floor at 29.35. B, it didn't actually make an advancement. This is just technical trading. So this is one of those situations of like, I could make an argument, hey, it made an advancement over the creek, it's holding its support, it could just go. But it has to come above 30.60, and it didn't do that. So right now it's technically still in a downward trend, even though it did jump the creek. I think it's just struggling. We gonna have to just wait. I don't think they're gonna give it to us. I would hope so. I would have hoped so. I'm sorry that it would have done it before close. But now we only have like a couple more hours. I really wouldn't want to see it just like push up here and just stop. We want to see it go above and hold support, and I don't think there's enough time for that unless it like moved in like five minutes up there. You need to trade for at least like 20-30 minutes, maybe more, above that top. Speaking of 30 minutes, this is a 30-minute 180 EMA, and it's quite literally like right where we are. This kind of reminds me of another earnings that we had. Where was that? It does kind of remind me of this one. Because last time we had an earnings, the volume like dropped off a cliff. It was going more to the upside. Obviously, it had already broken out. And so the setup was a bit different because it had already left the creek, yada, yada, yada. But what was curious was that during the day, I remember it closed. I remember being very, very, very curious about this because it closed like right on the, if I remember right, I think this is correct. It closed like right on the dot. Yeah, it was like right there. It did not make the jump. It just like didn't do it. And I think it was honestly like to the penny. Like it went when I went and zoomed in and looked at it. And there was another cross here that did not jump. I think it was this one. Yeah. And it was like right there on that intersection. And I remember thinking like that is the most ridiculous thing I've ever seen because it just refused to make a decision before the trading day was done. It like pushed above it, but then it came back down and it just sat right in between those two intersections. This was like the last earnings in March right here. And I was really frustrated by that because I thought, well, I have no idea. Like technically it came above the ice, which you're like, yeah, that's strong, right? It regained this trend. It closed above it. But then on the other hand, you're like, well, it did go above the top and then it closed beneath the top. So it was like, it was basically a anybody's guess kind of moment. And there was such low volume that it was really hard to judge how that was going to go. At the time, it was like, there really wasn't anything here super telling. I'm I try my best to pay attention to the tops and bottom volumes because it does tell you a lot about a range. Typically, higher volume and crazier spreads means that it's distribution. That's not always the case, but you can't really say that about anything in the market, anyways. But it would be like much higher percentage of the time that's a distributive action because there's reasons for that, like behind that in terms of liquidity. There's a lot of times it's to do with like shorts covering and not with buying, for example. Um, and then buying is met with a lot of selling on the peaks and blah, 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 blah. So you get these really high volume peaks and low volume bottoms because the bottom buy-ins are actually just covering shorts, and then the top are a lot of buying, but there's a lot of selling because of FOMO. People are buying, but then they're just selling into weak hands, as they say. Anyways, but when the volume dries out, that's usually a better sign of accumulation. So I guess we could make that argument that that's the case here. I'm just most nervous about the little pieces that didn't get kind of checkboxed. So what happens if it drops? Well, I'm going to try to do this right. I'm going to put this on the chart now. So that's the opening bell right there. I think it's likely, and I don't know for sure, but I think it's likely if we do get a drop and it holds strong that we're going to just see that 29.35 again. I think if it's not strong and this ends up being kind of a double top action right here, what normally happens is that you come back to some other creek that you've already created in the cross. So what I'm going to do is get rid of this now, this triangle thing, so that we can do the measurement. The S-curve that I have is probably a pretty good indication of where that creek was, at least at that time. I don't think that's a bad illustration of the creek, actually. So that's a possibility that it goes that low. But I would be looking backwards at this guy coming down. This is the likely one. So again, the good news is right now, a drop down there doesn't get you beyond the floor, which is great. That's pretty strong. So you can make a decent drop without losing the trend or losing the range. The only big problem, of course, being the lack of new high, which we've already stated. So I don't want to overstate that. We've already said that. So at this point, the biggest potential drop, I think, is still down to 28. And it is a gap fill. If it dropped and it opened at 28, I would be very bullish, at least initially. So there's some good news there, which is that if you drop to 28, I think you're likely going to see a pretty big push back up, at least in the morning. I don't think it's very likely going to drop and keep dropping, not in this case, because the lowest it would go, in my opinion, is down here to like 27.50, and that's... Stop. Go on. Golly, kid. In and out, in and out, in and out. Just pick one. You can put some bug spray on too. Well, if you think Kenny sets the price, then I don't think this is the right channel for you. I don't drink that Kool-Aid. I don't believe that that's always the case. So if you're thinking about operators, then yeah, like operators are the ones that are driving the stock around, but that's because they have the most money in the play. And that may seem unfair, but I don't think that I don't think that goes beyond supply and demand. I think it's really simple. Like if it's me with $5 versus someone else with $5 million, then the guy with $5 million is going to have a far greater impact on price movement. That's all there is to it. again, if you have $5 and someone has $5 million, who do you think is going to have a greater impact on the trading of the price? If you have the ability to kind of meet every single buy order with a sell order or every single sell order with a buy order, do you think you can control the price action? If the answer is yes, because of math, then that's all there is to it. That may seem very unfair or unreasonable, but it is what it is. And when you have option sellers who are really trying to maximize profit, then Friday becomes an option seller's dream. Until what? Until your operators don't drive the price that way and they don't allow the option sellers to do what they want to do. This idea that max pain happens every week is the most poppycock, ridiculous idea I've ever heard. It does not happen every week. There are periods of time where, yes, if you're a range bound, it's probably going to go to high liquidity. It's probably going to favor the option sellers. Welcome to the world of capitalism. Like, what do you want me to say? The only way to make a fair and open market, if you're concerned about people having more money than you, is to limit everybody to one trade or to like X amount of trades, which is also not open. You're basically like regulating how much people can or can't spend. These are not like machines. These are human-driven institutions. They developed a system where they take money from investors by taking money from other investors and using these gigantic pools of investments. Hence the 401k, generation. I don't know what you want me to say. Yeah, that's a pretty ignorant way of looking at the market, or I should say ethnocentric, or maybe not ethnocentric, like chronocentric. Like you're basically saying that we live in a time with machines, so people should, I don't know, not be able to use them. Like they use them and that's all there is to it. But the stuff that I'm talking about was developed 100 years ago. So what do you say to that? Like Richard Wyckoff talked about institutional trading and how they manipulated the markets with their big money, right? With the large amounts of money that they had as institutions. Those are just human beings with spreadsheets and like graph paper. They did not have computers when Richard Wyckoff was writing about institutional trading practices. So where in the world do we get this idea that suddenly the markets are manipulated in a way that is somehow brand new? Like they're using tactics that are hundreds of years old at this point. You're not going to win this argument. Like it's tried and tested and proven to be wrong. I'm not trying to be a jerk about it, but this has come into this chat so many times, and it's like, I'm not trying to shut it down either. I value people's opinions, and you're more than welcome to have an opinion that differs from my own. But like, if we're just going to sit here and argue about it, like I'm going to have a point for every point you make because it's already been tested. Like I've been there myself. Like I was on that bandwagon because I was eating and drinking the Kool-Aid that people were throwing out to me about how smart money is this and that and the other. It is what it is, but the solutions that people have are not real solutions. People don't offer actual solutions. The problems with the market, with the dark pool trading or the off-exchange trading or the idea of like naked shorting, these could be really good problems to address. But if you get rid of dark pool trading, you have to understand that it comes with consequences. The consequences are that $5 million order doesn't hit the tape over a series of transactions in the dark pool. It hits the tape all at once, right? So like you're going to have the exact same problems in a lot of ways. Oh, well, dark pool does this and that and the other. It conceals the true price, and I don't find that there's personally a lot of evidence for that. So, but you don't have to send them in the dark pools. You can choose to not. And even if they did, it's not going to make this is the problem, right? Is like, if I were in a trading room, okay, let me put it this way. If you were on Wall Street right now and you had 300,000 people, retail traders, come in and they all bought 5 shares of GameStop. Now, you can make the argument that if that immediately went through, it would send GameStop to the moon. But you're also neglecting to realize that there's huge amounts of institutions that are willing to part with their shares, right? And sell it, and then there's other institutions that are not willing to part with their shares. And you have to understand that like every buy order and sell order is met with some other. So at some point, the money that's exchanging hands is equivalent. It has to be. What pushes the bid and the ask up is what people are willing to pay for it, the value. The problem is that if I have some guy, if we come in with 300,000 shares and we think that's a big deal, yeah, it's a big deal, but it's a big deal for like one moment in time. If an institution can afford to meet that order, then it's done. Like, it's over. Now it's back into big money's hands. Like, it does not stay. The whole idea that Roaring Kitty put forward was a technical argument about holding a stock option, because that's the way short squeeze happens. And to some degree, like, he didn't even make that argument initially. He was really just saying that the stock was undervalued and overshorted. That was his argument. Later developments were like, hey, this is what causes the short squeeze, is if you buy and hold. And the whole diamond hand thing came out of that. Like, we're not going to let you cover because we don't want to sell. So we're not going to give you the option. We're just going to keep buying and we're not going to sell anything. And that doesn't give you the option then to whatever, get out of your short positions, So there's all kinds of like intricacies there that are pretty unique and totally true, right? Because it's a way of gamifying the market. But that's also already happened, which means that at this point, that's not likely going to happen again, not in the same way. Now, you might say like, well, that's not true. Short squeezes have been happening all the same over time. Yes, but not in the way that it happened in GameStop. And now that they're aware of that, they've been in the play for several years. Big money has their hands steeped in it. They may even be running it as bull operators at this point. Institutions drive prices up just as much as they drive prices down. That's probably not true. The long operators drive prices up. Those are the people that are investing long term in like growth stocks and stuff. They're very patient, as companies would go. My point is that like, yeah, it's not paper trading anymore. We're not giving ourselves slips. We're not having to call our brokers and ask them to buy a share, and it's not literally like happening physically, but it's the same process. There's things that are confusing that process, I think, for retail traders. I would be all for making things more transparent, like showing us short positions or this or that and the other. Make things more transparent, make it easier for retail to participate in the market. Those are all things that I'm all for. I'm not against those things. All right. We're running in circles. I think I'm done with that now. You're welcome to be here, and I don't want to discount anyone's opinion. I really don't. But the ideas of Ken Griffin holding all the cards in every stock in the market is not true. Don't get me wrong, Citadel's a big boy, but your Vanguards and BlackRocks are more often than not the operators, like if they're in the stock, because they're huge. And Citadel isn't even like necessarily bearish. They had bought AMC a while ago. That doesn't matter, yeah, I know, because they could be lending out their shares, which is what I think Vanguard does. I don't think they're particularly bullish short term for much on AMC at all. My point is that, like, if you learn about, and I think this is probably the one of the greatest things about Wyckoff, you don't have to do it in practice, but if you read through it, it's like all of a sudden it's like the veil is lifted. If you read through the actual material about what's going on with institutional trading. Why would they drive the price up to drive the price down? What does this volume indication show you? Those are things that are super valuable. And I don't think they've changed personally. And it has everything to do with who has the most money. But that's not by default. That's not by default like a bad thing. I can see easily why it could be a bad thing. And like history has shown us that it can be a very bad thing. But money is neutral. Like money drops stocks, money raises stocks. So like for the person who's like a short who thinks that something's not worth this much, dropping the stock to them is like a good thing. We could say like, well, there's no retail that thinks that. I don't know. Like, there's plenty of retail out there that thinks GameStop's overvalued. Or AMC's overvalued or whatever, you know? And I don't know what exactly the numbers are, but there probably was a great irony to the whole GameStop movement, which a lot of people had cited that they were frustrated with Wall Street and frustrated with the financial systems of the world. And ultimately, like that was why it gained so much traction even after the big boom happened, where it wasn't just on Reddit anymore. Now it was like this global phenomenon everybody knew about. And a lot of people were saying, well, you know, I got screwed over in 2008 or whatever, you know, lost all this money. And it's like, yeah, but a lot of these institutions that are shorting, they're shorting and they're using that money to pay for people's retirements. It's not always the case that they're there just for their own bottom line. Of course, they make a lot of money. But they also have their investors who give them that money. They're responsible for it. It's kind of a weird thing to think about because they're, as an entity, it's like easy to hate on them. But then you realize like, well, yeah, Ken Griffin's got the most expensive apartment in like New York City. I don't feel bad when he loses a few $1 million, you know. Like I don't feel bad for him. If he came to me and said, oh, I lost $5 million today, boo-hoo, I'd be like, okay, well, what percentage of that your livelihood do you need? I'm not sure that that's really worth getting upset about, you know. But at the same time, it's like if he's managing people's 401ks and like they lose a ton of money and their company went bankrupt all of a sudden, that's going to a huge impact on the financial world, regardless of my opinions of him personally or like of the company and what they do and how much money they make. So it's a very strange, I think it's a strange movement that's more nuanced than we probably give it credit for. But I'm also like just one guy with one opinion. So certainly it's not the end all be all. This is a precarious setup. Then they cheat and take the buy button away. Explain that. That's not an argument like I need to make. Like I agree with you. It was criminal. And the fact that they got a slap on the wrist, it's a slap on the wrist. I think the problem is that we're confusing what actually happened, which is this idea. I said I wasn't going to keep going on this, but I'm still going, I guess. Like you realize that the reason that squeeze happened in GameStop, the way that it happened, is because there was a system in place that in some ways is broken, but ultimately was taken advantage of. Like it would not have happened if the system didn't exist for it to happen. The buy button removal was a reaction to that happening, and that's a completely different conversation because I agree, like that was a criminal. I should not have happened. And then they cited that they didn't have money to cover, which again, they should have had money. Like they needed to have money to Robinhood specifically, to be a broker or whatever. They just didn't have it. But what's the point in bringing that up when we talk about the short squeeze? We just get mad and angry, and then what? Well, call to action. Do something about it. Okay, do something about it. Write your senators, write your congresspeople. Gather support. That's what a lot of people did and do. Arguing about it on YouTube doesn't do jack diddly squat, in my opinion. It's good to have narratives, but we're acting like a bunch of Greek philosophers who are just wasting away in a courtyard, squabbling about the realities of the financial system. It's like this doesn't necessarily affect any change. And the fact still remains that what caused it to happen was based on the system that was in place. So the same system that you're like angry about enabled the squeeze. And it's a confusing thing, right? So you can say like, well, we got to get rid of the system. Well, it's the same system. You used it to make a huge amount of money as a retail investor in the squeeze. Then people just didn't sell. They didn't want to sell, and that's their choice. And then the stock dropped quite a bit over time, especially AMC. Now people are angry at Adam Aaron for some reason. He didn't cause the short squeeze to happen. They're just mad because he didn't go along with their ideas. And I'm like, all right, well, his job is to be a CEO. If you're mad at him because you think he's a crappy CEO, that's fine. But if you're just mad at him because you're displacing that anger and you need to point the finger and blame somebody, he's not the guy to blame. Like, it's the system that you're already participating in. But honestly, like, guys, the YouTubers, and I don't like throwing them under the bus because I don't think it was like malicious. I really don't. I genuinely think to some degree, not everybody, excuse me, to some degree, there was a sense of hype, obviously, that some people jumped in front of and took advantage of. And they became very popular overnight because they became the voice of these movements. These were young people, mostly, very young people. There's a few that were older, for sure, but the young people really gained traction because other young people were involved in the movement. I genuinely think that, yes, they did have a responsibility at that point to be very careful about what they say and about how they act and all that stuff. And again, I'm not blaming them if somebody else loses money. That's their choice. But it certainly was a narrative of like, we're going to buy and hold and we're not going to capitulate and all this other stuff. You create this sense of, and it's very cult-like. And I was a part of that. But, looking back on it, I don't blame them for it. I just know that like I received that information and I did not handle that information the way I should have, which is with a grain of salt. I should have looked at the institution of the market as it was and what had happened and said, is this an anomaly? Is this going to happen again? And honestly, looking back on it now, I'm like, I don't know why I was expecting it to happen again. That doesn't make any sense in the grand scheme of things. I do expect, from a technical standpoint, certain things to react and happen in a certain way because of the technical setup and the behavior model setup that there is. So I will say that, and I do believe that that's true. So I do think, yeah, are we going to be at $20 by February of next year? Yeah, I do, for AMC. But I can't say beyond that. I would not sit here and say that there's a silver lining behind every crappy situation like this. I think that's a lie, you know, and I'm not gonna do that. I'm just not going to. Um, we can only choose what we do now, right? And what we say now. We can't go back. We can't go back to 2 years ago, 3 years ago and change our words and say different things. There was a time when I think I was a little bit more on that ape pendulum of like, we got to buy and hold kind of stuff. I don't remember ever really peddling that on my on my channel, but if I did, I can't go back and undo that now. What I can do is like kind of look at where I am right now and say, this is what's happening. This is where things happening. That's what I choose to do. I'm also pretty different than I was 3 years ago, 5 years ago, 6 years ago, 10 years ago, 15 years ago. Like I change as a person and my opinions have changed a lot. And I think that what's worked for me has been, again, educating myself on the technical side of the market. That's why I focus on that. And I didn't make good money in the market, except for a few one-off big events until more recently when just focusing on the technical aspects of the market. That's not going to work for everybody, but it works for me. And if you're somebody that like genuinely wants to trade the stock market, I think you should have some kind of understanding of basic technical analysis. You don't have to like love it. You don't even have to use it that much. But even somebody who's into fundamentals knows where the buy levels are. And it's not always just based on market cap, right? Like they're aware of this is the best time to buy, you know. Why? Because it's at a support, like historic supports. We're probably going to find a lot of liquidity here, that kind of thing. That's all you need. If you don't want to do technical analysis, at least understand liquidity and support and resistance. That's all you really need. But, you know, for some of us, I think it's a little bit, for me anyways, I mean, it's become kind of an obsession. I kind of really enjoy, to some degree, doing it. Some days. When you're making money. Well, it's not just that. It's also like, it can be very tiring, you know? It's a never ending thing. So one of the things that I think gets me sometimes I sit here and think about it. I've been charting AMC almost every day, at least every week, I could say, for the past 3.5 years or something. There's not that many people out there who could say that or who would want to even admit to that, because it might seem like, well, then you should be making tons of money, right? Yeah, if I were willing to trade more on the downside, I probably would have, but I didn't trade that much on the downside. I traded a stock that was in a downtrend, not trading the downside, right? So again, it's like, I understand like the side of this that is geared towards, hey, we got to fight the man and all this stuff, but I'm not really about all that right now in my life. I just can't be. So I don't have the wherewithal for it. I've got enough day-to-day problems, and it's not because I'm lazy or I don't think it's important. I think it's important. I just don't think that I'm the best equipped person to do it. Like, I do not need to be a spokesperson for a retail stock trading movement. That's not my place. So for me, I'm just focusing on what I can and can't do. And what I can and can't do has more to do with what's in my bank account, at least for the stock market purposes, than anything else. It really has very little to do with dark pools and, you know, short interest and all this stuff that I think is important, but it's like naked shorting and all this. It's like, I just can't, can I do with that? I can't do anything with that. That doesn't help me trade this. Can I explain why it's barcoding for 3 weeks? From May 28th to now, yeah, this is an area that has an extreme amount of resistance and support at the same time. There's an attempt to hold on to something. So first we made an advancement, then you have a retracement. So you're going backwards to retest something. This has been a long test of a really long-term trend. And there's a lot going on here. There's like two cross trends here, which are wave crosses. 1, 2. One is pretty macro. One's a little smaller right here. We also have a parallel structure, which I haven't really expanded on this particular chart, but basically like we had trends that were existent last year around this time that we lost. The market is trying to get back into that same area where those trends are. In addition to that, we also have long-term trading regions above $4 on the horizontal, scale, that you have massive amounts of trading that's already happened from 4 to 460. There's no reason to trade that right now unless you can prove that you want to go up. Like cause and effect, right? If there's enough buy-in right now that we want to take the price higher, we want to go up to sell higher, then we'll do that. That's how uptrends work, right? So you're buying enough low that if there's reasonable cause to go up and sell, like there's people that want to go up. They want the markup. They want to drive the price higher to get out at a higher price. If they don't want to get out at a higher price, then a lot of this could be attributed to selling. We bought down here at 260. We get to sell at 350. That's enough for a lot of people. Then that could be a distributive action, in which case these are just ears that are pushing up and distributing. I think on the big picture, it's really just a case of like trying to find a support to push up again and see if we can push up higher to sell higher. And that ultimately, like the purpose of that is to bring the on balance up to then dump it into a spring. I genuinely do not think this is in an uptrend that's going to sustain all the way up to like $20 or something. I think it's very, very likely that this was a reaction near the bottom to absorb the buying in order to take it up and enlist more sellers. So the search is really for sellers. And that's ultimately where we come back to this $4 area. If we push above there, would it be to continue because buyers want to keep pushing it up? Or would it be because we're really trying to enlist more people to sell and begin a new downtrend, which is really just a back test if you look at the chart upside down. And ultimately, we can talk about the wave here, which hasn't really completed. I mean, that's the other thing that we're kind of leaving out, which is this guy. This ultimately had this resistance that broke out, and it did have a strong breakout, but it hasn't checked it. It didn't come back and like check it very well. These are just the mechanics of wave analytics in the market. I don't really know what else to say about that. So why has it been barcoding? It's barcoding because, I mean, you can sit here and say maybe that it was barcoding because of you can come in. You can come in, but I don't want you in and out slamming doors. You were going in and out like 3 times.
Oh.
Earlier you were. Okay? In or out. Okay?
Well,
so you could sit there and say it's because the so-and-so is trying to control the price and it's not moving. And I mean, what good is that? To me, this is a consolidation of sorts, one way or the other. I would suggest it's one of two things. Again, it's either that we're going to generate a downward motion, which is completion of a forward retracement, where you're made of retracement, but this is really like a halfway point, where basically shorts are unloading and reloading, and then you continue down. It's the same thing on the upside, by the way. When buyers push up and then they reload, they sell and then they reload, and then push up and sell and then reload. The same thing happens to the downside. Shorts load up, right? And then they buy and then they reload the shorts and then they sell again down, obviously. So these are really simple to me, like, because I see these and I just see waves. I see the M shape is always a cat ear, and it's always going to be it's always a moment of continuation and or breakdown, because I say because sometimes it's a little bit of a fake out, but like you could have a head fake here and then drop. It really looked like it's going to go up, right? Because it needs to go up a little bit versus the other way. The same exact thing happens though the other way, and that's the thing, is like there's bad cat ears and there's good cat ears. If you flip the chart upside down, they look exactly the same. They look identical. It's just one's going one direction, one's going the other. It's all there is to it, right? So I'm looking for signs of directional input. That's what the whole point of this is. That's why I stress stuff like it didn't make a higher high here. It has yet to change direction. That's important to know, because then you're aware that it's not actually in an uptrend yet. And this sideways action has done nothing to reverse itself just yet. Then we can look at big picture stuff and really see how it's going to influence the overall motion. Do I think that the cat ear pattern will play out on GME? This is the question that's being asked. So ignore how big this is. This is a huge move, right? If you saw this buy-in and it came down, you would be looking at whether or not this made a lower low when it pushed down here. Is there a weakness there? If there's a weakness here, it could mean that this is somewhat distributive. It doesn't have to be, but it did make a lower low right here, okay? Then you would look at what happened after it made the lower low. Was there a buy-in that was substantial? Not really. There's not really any high volume bottom here. All of this is really low volume garbage. So at this time, like I said, the bears have the advantage. They just do. Because at this particular point in time, even though, like I said, I think it could be accumulative, for certain other reasons, there's also this idea that like, well, is it making higher volume tops or higher volume bottoms? I'm seeing a lot of wicks on the upside that are just kind of leading to these kind of sustained sell-offs. I'm not really seeing a huge amount of volume come off of every bottom. Some of them are getting better, right? Some of these ones are getting a little bit more volume injection as it goes lower. That's a good sign, right? If you were to divide this in half, you could look at this and say like, well, where's most of the trading been? Well, early on, it looked like it was trading higher, longer, but now it's been trading lower. That's not really a great sign. Fact is, it didn't go above, right? So I've been saying like, I don't like the setup. It didn't do what I wanted it to do because it came below the trend. That's a simple trend breakdown. And now even if it pumped up, it has to kind of reverse the current character of it. The current character of it isn't particularly great. Now, AMC is a little different in that it looks a little more steady on its feet in terms of like where it's trading. It seems to be trading quite high for quite long, so that's good. Like the upper echelon here of this downward motion, that's fine. You get to these little like nuances, and that's where things get maybe a little bit tricky, right? But if I were normally looking at this and I saw this reaction come down below, my initial thought is that's not typically like a good thing. So initial thought is that typically means that there's somebody who's selling, right? That is able to drive the price pretty low, back down beneath the support that was used to drive the price up. It didn't hold. That's a lack of stopping power on the part of bulls. It could have stopped here, higher up, and that would have been stronger. It's that simple. There's more buyers. They're not going to let it drop below. But it didn't do that. Instead, it drops below. Then you have this consolidation that's basically doing nothing. It's not really advancing to the upside. It's not really advancing to the downside. So you're left kind of sitting here twiddling your thumbs, wondering if it could. And you don't really know for sure. But we did see that it made an auto reaction off this bottom. And now we have like a new range. So after the initial push, this by itself, in my opinion, is a little bit bearish because again, and I say a little bit instead of it definitely is bearish. Sometimes things change in that range, but this typically is not a great sign that it dropped beneath there. But then the rest of it is really its own beast, because now you have within this, and this is where, again, things get a little complex. If you watched a Wyckoffean analysis, they would call this initial motion down probably like the auto reaction. But the thing is that in a reaccumulation versus a distribution, these markers are largely similar, but they relabel them. Well, that's confusing. Well, it is, but the main reason for that is because there is a reaccumulation that happens after a descending pattern, which means that it has a high peak and then it descends far, and then this range becomes a reaccumulation. And if that occurs, then this could look a number of different ways, right? Versus this just being an auto reaction that's got a sign of weakness, this actually could flip it around where this now becomes like a new accumulation. This becomes a sort of auto reaction by itself. This is kind of what we're seeing. And then it comes up top. And then ultimately it comes down and makes like a new low. Again, could it be a phase B bottom with a spring? Maybe. It really depends on if you define it as an accumulation or a distribution to begin with. That's where I'm always kind of stuck, because that's why I get stuck in these, because they look pretty much the same. The same is true for a redistribution versus a accumulation, a distribution versus a reaccumulation. The diagrams are almost identical. You're relying on the bottoms essentially to help define the motion. Regardless, one of the best ways to look at this would be to just simply observe, if you're not positive about what it is, right, would be to simply observe this as a series of M crosses. So what I usually look at when I'm doing stuff like basics is I'll look at M1, M2. Now, these can be in a bajillion different places. They can be positioned low like this, which is kind of what AMC is looking like right now, right? They can be higher up like this in an elevated way, which a lot of people will say it looks like a flag, right? They could basically be sideways as in a triangle. Doesn't really matter. The reason it doesn't matter that much is because at the end of the day, what you're really looking for anyways with these motions is you're looking at those creek crosses, and you're looking at that setup as if it's going to make a decision based on that, if you're doing it in a waveform schematic. And this is a very simple way to look at it, because if it breaks the ice, you know that the next stop is going to be that trend down. Well, is it possible that that's a reaccumulation? Even if it drops here? Yes. Why? Because it depends on this setup. How do we know? Well, the confirmation of this as a spring doesn't come until you come back above, which is where people don't quite like it, because they don't quite understand that. They think that I can tell you exactly what's going to happen, but I can't. I can't really do that unless I have like a perfect grasp on all of the volume, etc. Almost always, if it's going to be bullish, it will have, on AMC, it almost always has a spring. It's very rare that it doesn't. Extremely rare. It almost always goes backwards. So you get these sell-offs that have these kind of latent dips. GME is a little different. It doesn't always go for like the low. AMC almost always does. Recently, it didn't. Right here, you can see when it did the backup, it did not go for a spring. It stayed high and elevated. It's a lot easier when it doesn't, because it makes it simple. It jumps the creek, holds the support, and then it advances. It's very straightforward. It's a lot more taxing to have to wait to see if it's going to do a spring, right? It's like a lot more taxing. And to wait for that creek jump can take a really long time. Remember back here, this whole thing, I'm talking about these little micro iterations and junk, and I think it's great to kind of spitball and talk about those things. But remember, like, this ultimately was just a range, and at the end of the day, if you were to look at this and you said, like, when did it actually leave the range? Well, it didn't leave the range till way over here, This is like the SOS. It jumped the creek pretty early. It jumped the creek right here, and then it held support LPS and left the range. So the reason I break it into simpler pieces for myself, and I'm getting to your question. I know you asked me a simple question. The reason I'm breaking this into simpler pieces is because sometimes it's a bit tricky to know what's going on. And so the assumption is like, well, if I think it's going to go, I'm going to try to prove that this is bullish by doing this or this or this with the cat ears. The cat ears themselves are just like neutral ideas. And they can result in different things. It's not by itself enough, right? Because by itself, it's a stagnant thing. Like I said, I showed you 3 different ways they get set up. So in this particular example, one might say that that's a phase B support with a spring. And then the next one jumps up and over. This is kind of what happened just now. The problem is it did not make a higher high. You don't have confirmation that it's actually changed direction. So this right here is an issue for us right where we are presently. This is basically the same diagram that we just saw. What's the problem there? Again, it didn't make a higher push. Why would that be an issue? Because it's showing that there's a little bit of a problem. And it goes back to that. There's some kind of reason. I don't know exactly why. But for some reason, the bulls are not pushing it up above the top. Or supply is just really heavy and they're not letting it go. Resistance is there. They don't want it to advance. So on the one hand, yeah, it jumped over this creek. It did do that right here. It jumped it. But on the other hand, it's not advancing rapidly. And we've got additional creeks coming down, and I didn't draw it on this diagram, that are here that it hasn't broken over yet. So you're kind of stuck. To me, I look at this and I'm thinking like, well, as a wave, it's probably just not done yet. That's more likely the case, that it's something like this and it's just not finished. But again, the issue is like, I can't really tell just yet if it's going to finish the way I want it to finish, because it could be that this goes into what I call like that hook motion. Whoops. And we're just not there yet. It hasn't shown us, right, that it's going to definitely make this jump. Which is why I've been stressing like these top areas. It needs to get over 31, with some support. It needs to get over on AMC 362, because if I don't know, then there's really nothing else to wait for. Like there's no perfect indication. Even if this advanced again, you might say, well, that looks good, right? Yeah, but what if it sells off here and then this turns into a distribution down? You're left holding the bag and the cat ear was actually positioned low. Well, how would you know that? You look at these kind of signals, like these downtrends, like right here. Well, it didn't go lower. No, it didn't, but I still look at it. What about these two? Well, we could look at that too. Sometimes the bears are pretty on the nose about directional input. That's a possibility. It looks like an area between 29 and like 28.90, perhaps. Maybe even lower. If you look over here, this could be as low as 28. That kind of falls into line with what we were thinking. $28. Well, we have a gap down there. That should help inform us. Is there any other reasonable expectation? Yeah, maybe. At the end of the day, like we can always use the highest peak to that where we think that main cross is, which is probably here. I may be able to use this one as well. That's really steep. That drop would be extremely far. So on and so forth. Okay. I'm just using that as a way of understanding where those floors are. But in order to kind of see the confirmations, you're going to watch those levels just like you would on the most basic scales. We're going to be talking about extremely simple stuff here, which is like higher highs and those advancements needing to cross up. If this is going to go, it's going to advance at some point to the upside here. And that's going to be that. Does it have to look just like this? No. And this is, again, this is why having a better understanding of Wyckoff can help you with things like range-bound wave schematics, because while it is useful to consider that that could happen and it just goes right up, you have like maybe an S-curve there that could be like, yep, there it is. What's also possible is that this goes into what's called an SOS with a backup, where you basically come up to the top, you hold pretty strong, but then you actually back up to the creek. Again, does that look like a cat ear again? Yes. Does that mean it's going to break down? No. How do we know the difference between that and a distribution? Again, there would be a series of upward trends. And this is where you look at the big picture. You stop worrying about this little minutia early on. You just kind of consider, all right, there was a problem early on. There were a couple places that indicated low. Don't worry so much about that. And you look at the minutia of it, that's going to kind of cause you some problems. Typically, you don't want a backup to go more than 50% through the range. If it shows weakness here, which I'm drawing it as if it's showing weakness, like it dropped below, it's better to see this kind of immediately recover and go. That's the strongest one. It would be extremely challenging, maybe even to see it react down. And this is usually where we run into some problems because of AMC being kind of bearish. Because usually that reaction down, it's really an expansion on this range where you could say, this is an auto reaction, this is a phase B, blah, 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 and it goes on and on and on indefinitely. But, and that's, I'm not going to do that. I'm not going to just show how it could go on and on and on. That's why phase Bs are not easily tradable, and that's why coffee and traders don't typically trade phase B, because it's extremely irrational at times. It feels like you're just chasing the tail, right? Because you don't know when it's going to actually move. You wait till the clear signs of like spring or SOS into SOS, and that's where you trade. Even here, if there was a weakness early on and you wrongfully identified that weakness, most likely it's going to be here. It's not usually, or like here, for example. You'd have like an auto reaction here and then it would drop again. That's typically where we see a weakness on AMC. It's like after the auto reaction, if it goes down again, it's almost always going to be distributive, and then it goes into like an upthrust and then a UTAD. There might even be like a longer standing UTAD over here. Right, we've seen this before. And then ultimately this is still bearish if it's like that and you end up with some kind of nasty slide down. This is basically what happened to us on the big picture, except that this didn't ever go back up again very high. It stayed really low. And it sagged like really low. So it went like this way. That's what it did. So do I think that there could be a cat ear? Well, yeah, but the only thing I'm really looking at right now when I look at this picture is like we haven't finished the diagram yet. So you can't say for sure, but I do think that there's some signs here of positive and a little bit of negative. The main negative is that first sell-off, and everything else thus far has been kind of, since then, has been kind of positive. So this initial drop right here, pushing below that lowest support that we had on May 22nd, is a bit odd. And had it come down again below that low, I would have been a little bit more bearish, but it did not. So if it had pushed below this marker here, and then when it did its auto reaction and a phase B type bottom or a secondary support here, if that had come below, and I know it's a little hard to see on this chart, is this red blob, but if this had come below, this marker on the 5th had come below that marker on the 30th, I probably would have suggested that it's probably bearish, especially on this one, the first one I should say. Even this one would have been worse potentially. Then you have the issue of like cat ears themselves, and the question of like, well, where does that cat ear go? You know, that's complicated. Because like a cat ear wouldn't include this. This is a buying climax, and it doesn't necessarily include that. I would look at a waveform as a series of bottoms and tops, right? It's bottom, top, bottom, top, bottom, top. So if I take apart this other thing that I have, what I'm going to be looking for is where was the support? There's two supports. One's right here. So you're asking me about the cat ear. I'm telling you, like, it would probably be bound to one of these bottom top supports. Looks like this one was pretty closely used right here. You can see the bulls were kind of grabbing onto it. That's one area that might present a problem. I've already got that on the chart up here at like 3290. That makes sense as well because it is near the previous top. So another top coming down. So like if you were going to have a cat ear, you could jump the creek here and push up. And then you're just waiting to make sure it doesn't sell back through. You know, I think if you had the assumption that this was bearish, you'd probably expect it to pump to like 3270 and then sell back down. Just like we were saying, like it could drop down to 28 and then come back up. This is likewise the same idea, that it would pump up here and then drop down low. It failed to hold the trend and just kind of capitulate. That's the cat ear. I don't think it's very likely that the cat ear goes all the way up to the top necessarily and sells all the way back down, though that is on the chart here because this was so flat. So what they effectively did in trading this out or in building this out, they generated this creek that's really low right here. It goes really far down. And if you did have the pump and the dump, it would be a pump up to like 3280 and then dump all the way down towards 2704. I think if it's bearish, it goes into that SOW realm, right? And then you could have a series of like up thrusts or whatever to try to find it again. You lose this, obviously. I've already made the case that I don't think that's what's happening, as best as I can tell. You could have a dip and a rip here, that's fine. But you couldn't have like a pop up that then sells all the way back down without some question of like, are we in a weakness, and then therefore is this going to fail, you know? But that hasn't happened yet. We're just spitballing. It really is an order of operations thing, right? If you go down first, this could be a completed, even if it's like locally kind of looks distributive, it could be completed as a cumulative action to dip below. It doesn't have to go super far, just down to like 2850 or something, or 2860s, and then push back up. That's fine. We actually did that before up here. We had this early advancement and we backed up to where the support was and then ran. That'd be like us backing up to this level where that gap was left and then running. It's not the end of the world. And now ultimately, like if you look backwards at where those support lines are, it kind of makes sense. There's one back here on the top and then a top. That's where it is. It's right there at like 2890. So there's a lot of like little things like on the big picture. I'm like, yeah, it doesn't really hurt it. I could see that not being a problem. That's why I call it a shallow S curve, because it's really like an reaccumulation that just has a spring at the end. So it looks like it's going to do a full S curve and just continue, but it's not actually a bear flag. That's continuation. It's really a reaccumulation that has a spring, and it's different. That reacts to the upside, usually with strength, and then continues. But frankly, like I said, once it gets above 3116, it's in cat ear territory, like I guess, because technically it could hook here and drop. But that's me speculating. Once it gets above there, you're just watching for continuation or a change of character. There's not really anything else to say. Because in that Wyckoff schematic, like I'm just going to do it really simple. Like you might have like a spring here, but then if you jump that creek and advance, this is this buying climax. It's usually not even really a part of the diagram. Typically, like this is the more important, is this advancement early on. So this is a really simple way of drawing like a shallow S curve, which is like, oh, it's strong, but then it has a spring. And and then it jumps the creek. But the SOS is typically marked off like in this area with this advancement. And then it goes back to the buying climax. And a lot of those diagrams, they have like another SOS. They'll put like a second SOS. They'll put like LPSs here. They'll be like SOS, SOS, sign of strength, because it sort of has to do it again. I mean, that's just the way it goes. So if I left it at, well, there could be a cat ear here, and I just said, yeah, there could be a cat ear. Well, I mean, that's a big question mark. Where would that be? Like I said, there's two places this likely distributes. One is right off the top at 31.15. If it's going to do an up thrust and fail, that's one place it would do it. The second place would probably be up here at like 32.86. Do I think that's what's going to happen? No. But timing is very, very important to understand that like the way that I have this drawn isn't necessarily the way it's going to go. I had said that I thought that it may be one kind of big move because of what I saw on AMC and some other charts that look like, yeah, this may need to all happen in like one kind of big move, whether it's like a dip and a rip or just a rip. But reality is not always that simple. And the reality is that this could take as long as it needs to take. You know, if this dropped into a spring and then reacted up, that's wonderful. But then what are you going to do there? I don't know. Like, technically, if you're just trading this like you just could have a big handle on it and just kind of, like I did over here, and just kind of chop here for a long time. And then do it again, right? And this may be a week or two out before it goes up. So if you're an options trader, it doesn't really make sense to play anything except for the volatility here, unless you want to play out past maybe into July. If you're trading shares, you probably wouldn't care. You're just going to trade it anyways, whichever direction you think it's going to go. And there's really nothing here that says it has to go up that fast. But you do. You have it going up here, and well, some of that is based on what's happened before. Like, when you look at behavior patterns and trading patterns, I don't really see a huge need to trade right here because we've already done it. We did it back here. So I think there's a reason that we're kind of stuck where we're stuck. You can see that the area that we're trading in on GME is kind of this missing pocket. I'll like color code it differently. Right there. So we're trading in a liquid area that hasn't been traded. These areas that pass through it or that like peek through it don't count. It has to have like sideways action, and then it'll show up on your VRVP. So this area that we're trading right now, largely untraded in the whole grand scheme of this, which is always interesting when you look back. There's bits and pieces here and there, but it's very empty by comparison to what's directly above it and below it, where there was a lot more sideways trading. A lot more sideways below it. Not as much above it, but it was traded. So again, like, you look at this and you say, well, is that the reason that this had a wick there to this top at 32? Probably. That would then make sense as an area to kind of rapidly go to one range to the next range. Yeah. So it's working, right, Booksy? Yeah. I don't think this is in a vacuum. The idea of this as a wave up, down, up again, because the way these things mark off is almost always in accordance with where those liquidity levels are anyways. Like, it almost always makes perfect sense. And if it doesn't make sense, you just have to wait a while and then it will make sense, because you probably are just missing something on the big picture that might need to happen in the future. But this totally makes sense as a liquidity stop, and why this area is being traded versus this area. It's also kind of where we were at earnings, back in December. And we pumped up into the same area in March. So we were here like repeatedly during earnings seasons. And then it also has a lack of sideways trading there. Now we've done it. Now we've traded the area between 29. So again, I don't know how you'd explain that if you don't believe that liquidity matters in the market. The fact that it's going across all these regions doesn't make any sense to me. If you don't think there's a real liquidity search, this is just kind of randomly here, I guess, which doesn't make sense to me. But the next stop being like up here at 32 to try to build out support would make more sense. And then again, here to build out support would make more sense. So those are the levels I'm looking for. All right. Possible rejection if it goes too high, like to 31.30 or something, and then slides back through creeks. That's bad. That means that you're going up to the top of this little tiny range and you're selling it off. We have one unfortunate problem, which is the lack of advancement right here, which was today. That's the main problem. The early little weakness is less important because it didn't make a lower low, at least not yet. So I think there could be a spring. That's why I'm like leaving that open. It's part of the reason why I don't feel like that's out of the question here. Because I'm like, yeah, there's nothing wrong with testing below there. If you've already checked out and you think you're going to go, then you could dip low. I don't really want to rip high, push above the top, and then drive through the bottom. That would be not good. So the spring is still an open possibility. The up thrust here would be negative, and yes, that to me would look like a cat ear. The other possibility is the up thrust kind of resulting in some kind of a push up to about 32 and then selling back down again. Although admittedly, I don't think that you could make an argument that that's, if this came back down here, that's necessarily a bad thing. Why not? Because again, like creeks matter. So this is a really shallow creek now. So it could come pretty far down. It's the way in which this sets up that determines what could or could not later constitute a breakdown. So like right now, if this sets up with this really low creek, which it did, then you could easily make the argument that, well, it doesn't really hurt it then if it has this big advancement and comes back. No, it doesn't. You know, which leaves the door open for a lot of possibilities here. How the heck am I supposed to trade this, Booksy, if I don't know? Exactly like this. You wait and see. You wait and see if this becomes a rising wedge, right, and turns into an S-curve, or if it capitulates. Well, what if they shake me out? Then they shake you out. You know, I don't know what to tell you. Or you just play what you know. Like, you just play up to this point. You, like, take the trade for what it is, and then you let the rest be runners. If you keep some. It's up to you to trade it, you know, how you want to trade it, not me. But I would be saying like, yeah, man, if this pops, I'm already told you I'm concerned it pops and it does so in a negative way here. It just runs up into the close, and it's actually like a up thrust. That's my biggest concern. It's doing it. It's like makes it so it's really hard to know, right? But I don't know how it's going to close. We got 40 something minutes, so we don't know yet. I would have preferred this had made the jump earlier to prove support. So if it just up thrusts right here and goes up to the top, we'll see how far it goes. That's one piece of the puzzle. And then we'll also see if it makes any kind of support. We'll see if it drops beneath any kind of support. If it just popped right here and then closed at like 30, 40, that just leaves a lot of doors open. It doesn't really tell you anything. So that wouldn't be the worst case scenario, but I would be annoyed by it, but I wouldn't be like, oh, it has to come down or something, you know. If it goes up really high here to like, again, above the top, like 31 something, and then it dropped back below to like 30 in the next 40 minutes, I think that would be a bit bearish. I'd have to say that's bearish. Right now, it's just kind of propelling itself off the center of this range. It really just consolidated into a wedge. So we'll have to wait and see how the day ends. To me, AMC looked a lot weaker. Again, it hit that reaction and came lower. I think it's more likely that AMC goes into a kind of distributive motion than it is for GME, but both might still end up to the upside. I'm looking outward because I want to see if the rest of the market is kind of doing this motion too. That could be helpful to know. Like, did the market lose its footing and is it doing like an upthrust or what? Or is it fine? Let me see here. No, this is still pretty wide. It's got space to come down without dropping a ledge. That's just one ticker. RSI looks kind of meh, but again, I think it held its trend here. Yeah. It's okay. It's not a definitive bear sign. I'll say that. It could still cross back up and go a little further. Apple's doing that thing that I don't really like, which is doing that run up to the creek. Apple looks maybe a little more bearish than some others. So. Starting to look like a head and shoulder almost. What's going on with the trend there? Can't even tell. So this is just me looking at the market and seeing if there's some kind of a pump end of day. It's not always just because of... Yeah, so this has not made an advancement yet. Let's take a look at SPY. It's kind of a nasty looking wedge, isn't it? Thank you.
What?
I said thank you.
What doing what?
For cleaning the screen off. Yeah, there's a bit of a wedge here. Let's see. Rising wedges are not typically the best, but it just depends on volume. And a lot of times, if they break to the upside, not always, but a lot of times they break to the upside, they do so with a trend. So there's a trend back here, like this distance to this distance. So yeah, it would potentially break up to like 608. And then that could be now a trend instead of it being like a wedge. Again, it's a possibility. Actually, the trend itself looks like it goes pretty high. That's probably more about speed than anything else. Like that direction. I could see that. So yeah, never mind. It could go up pretty far. It could go up to 611 like we thought. So if it's a wedge, it certainly doesn't look good, but it's not at the bottom of the wedge, it's at the top. This is a wedge, you would suggest that it's probably about near breaking down Wednesday. Then it would drop back below maybe a 60% retrace or something. Yeah, potentially probably back down to the gap right here. So that would be from here to the gap. That's a possibility. Possibility, but it hasn't happened yet. And then it's also possible that this is indeed going to go up and then back down. So there's a kind of a double whammy there. That's sort of what I had before, because it would be coming back here, but over time. And that makes sense to me. Some of this stuff was a bit speculative. I don't really remember why I did what I did here, but I think what that is that marker here. Yeah. So pushing back below, I could see that. That works. So a final pop to like near the top here isn't unwarranted. It hasn't made the drop yet. So certainly that plays into the ideas of, you know, an even bigger trend as well. This direction. Yeah, there's potential for a lot of things right here. That'd be like this zone there. I guess we're not there yet, so that makes sense coming back. No, I'm not going to be streaming their earnings. If they have a call or something, I won't be streaming it. I'm probably just going to release the news and then we'll see what happens. I don't think I'm going to follow the whole thing if they're doing a call. Right? All right. Yeah, that 4 hour is crossing back up here. It's trying to advance again. I want to say it's kind of like that. The M cross here is basically like suggesting you're going to try to come back up. And the elevated nature, that would be like another push here. So it's like an elevated curve. Doesn't have to come as high, but that is where it is. So it is jumping over. This is the same way. See it crossed up here on the 4 hour. It's got room. So it cooled off and then crossed up and over. This is a tough one. So that's a nice cross up right there. I think that in the grand scheme of things, this isn't, I wouldn't say this is like particularly bullish. I just say that it looks like it's going to try to make another move back into overbought territory. It still looks a little bit like a what do you call it? Like a last point of supply on RSI. It's interesting. Where's that coming from? on the price action. Way back up here. Bottom. What are you looking at? That's interesting. Really interesting. Because that's actually where we thought that might go if it dropped right there. I wonder if it's just going to do like a quick pump and then drive the price really low. Or if it just dumps. Like this pops up to here and then just goes down like immediately. Something like that. I'm not sure. Usually if it gets running, it tends to run up, stay up pretty high. Oh, and that's where the moving average is on the 4 hour. It's right here. So pulling it up again may actually bring it closer. That gap is certainly well positioned. Yeah, I think this dip might indicate that's what I was saying, like it dropped weirdly, it kind of dropped through the RSI wedge. There may be another one like slightly wider, but if I was looking at this, I see that as a possible like push up as well. Like that we might see a little bit more upside here. Then again, maybe they did that here. That advancement was probably like against the grain for a lot of people. Well, I don't know. I mean, I wouldn't trade it up to the upside here. It'd be probably safer to trade it down, but I think that it's debatable. I really think it's going to try to double top at like 608. I just don't see why not. If you come this far. Like if it didn't do it now, it would need to do it kind of like right after. So Hmm.
Are you done?
No. Puts for SPY. How far? I genuinely don't think SPY needs to make like a massive retracement. I think it's possible it only goes down to like 570s and just kind of doesn't go any further below. But I also don't know for sure that it's gonna go that low. This is just more of a theory on what I think might happen. based on a few different things. I think it's going to try to go into this lower liquidity area though. It makes more sense to me to come back down there, but I don't know. Beyond that, I'm not sure. I mean, so the short answer is yeah, I think it'd be okay out in July, just depending on what happens here in the setup at the top. It's not there yet, you know, it's not at a real point of it's definitely going down right now kind of moment. There was an S curve that came pretty high into July, so that made me question things. I wouldn't hold anything very long in this market right now. That's me personally. So, all right. Final prediction for GameStop. If I have to pick one, I think I don't know. GameStop's in a weird spot, man. It never broke there. That's good. It doesn't take much to sort of drop this pretty far. Like if they came back below 29.81, I think it could drop pretty far down. If it could drop pretty quickly. I mean, if it goes above, likewise, here at 30.50 also goes pretty quick. It's kind of weirdly set up with these little pockets in mind, I think. You can see the curvature is like tightening here. So there's a lot of space. I guess right now what I'm going to go with is a drop into a pump. If I had to pick one. But that's just like my opinion. So what I mean is not a huge drop, but like I think it could easily see it drop down to like 29 or something and then just rip. If I have to pick one. That's probably what I'd pick. I mean, it could change in the next 20 minutes because if this thing goes too high too fast, I think we could be into trouble. But yeah, it would be sensible to see it like open low and then rip up through here. That would make a lot of sense to me and jump the creek. If it goes up too quickly right now, I can't even really begin to tell you how disappointing that would be. Because see, I think right now it looks kind of distributive, but I don't think that's necessarily the case. I think it's trying really hard to look like a distribution. With the motion here, it just has that consistent, like we're going to try to go up and advance, but we keep failing to do so. And that to me is like typically more distributive. As you can see that like motion above here, 1, 2, 3, 4 times. That's like a 4 top, right? That's kind of bearish. But I think this one's a little too close together. So I think what we're seeing is we're actually seeing like a 1, 2, 3. And this 3 is part of the cross up and over. So I feel like it's missing like a piece here where it's going to do like a pull down. And that's where you're going to get that potential for a spring. And it may not even go that low, you know. Like I said, it may not go below the bottom much at all. I wouldn't be surprised with like a double bottom even, and then just jump up. So it's like a 1, 1, 2 right here that's actually just like a spring. And then the real 3, 4 is really that jump here, 3, 4. 3 right here and then 4. So yeah, if I had to like pick one thing, this to me would seem the most likely. This is kind of presenting itself like it's failing. That's what I'm trying to say. It doesn't look particularly great, gotta be honest. And it's gonna like just do some kind of drop, but I don't see any backups that haven't been done. Like it keeps checking itself. So it's done a pretty good job. So the argument from a bear would be that this is some kind of a flag and it's gonna like break out this way. But you don't have any real there's no real jump that way either. It's hard to say though. Really hard to say. I can still see this area being targeted though, which is kind of like, it's interesting. God, it just did not make a sign of strength. Low volume, 90% of my TA, ignoring. Occasionally I'll do it. I've done it more and more lately. Regular trading hours is typically what I do because it's a better representation of actual liquidity. The only thing that bothers me about that you have to kind of pay attention to with extended trading, there's two things. One is high volume like wicks, up or down, need to be monitored because it does matter. Number two is gap zones. Institutions don't leave gaps unless there's an intent to come back to it later. Especially on like the short term, because again, institutional trading desires to check liquidity and trade shares as many places as possible. So usually it's an indication of like we're saving it for later, or sometimes it's like it's been exhausted and or they're not wanting to trade it for some other reason, which is kind of strange thing to say. Anyways, so gaps do matter. Mostly for liquidity purposes. The reason gaps fill is because of that. Now it's almost like a psychological thing where we think gaps have to fill, but they don't by default have to fill unless there's a liquidity problem, which typically there is. So more often than not, an institution does not actually want to leave a gap unless there's some bigger reason behind it. So those are important things that happen in extended trading hours. But by comparison, the volume and the liquidity that's traded in regular trading hours on most tickers compared to extended trading hours is night and day. And some tickers have almost no after hours trading volume at all. Um, it just depends on the ticker and like whether or not you think that's important. Uh, Probably would be again volume concerns. Some of your bigger things like the S&P 500, some of your bigger ETFs, yeah, like those extended hours are very relevant and they often chart very similarly where they'll give you some similar outcomes. They're more consistent and they're important for that reason. But I don't think that, largely speaking, they should be used. Nowadays, it's becoming more and more common to see high volume extended hours moves, so it's a little different. I think my mind has changed a bit because a lot of times important things happen in extended hours, so. But traditionally, that's not the case, you know. Volume exploration, liquidity exploration needs to be accounted for in regular trading hours. So like even if something traded in extended hours, if it didn't happen in regular trading hours, I think that's an open door is what I'm trying to say. So it's not that the technical analysis is wrong, usually it's right, but you also get different numbers that yield kind of the same results. If that makes sense, or similar results. There's been a few times where I've looked at extended trading hours and it's like, oh, it's already broken out in extended trading hours. Well, does that mean anything? And I would say that 90% of the time it doesn't actually mean anything. Like you see that it still has to break out in regular trading hours. So I'm not sure. Nowadays, I think it's prudent to use extended trading hours often, but I don't. I flip back and forth. Some charts were built on extended trading hours only. Like I have charts that were using extended trading hours. They don't make any sense if you put them on regular trading because look at the numbers are all wrong. And if you're only in here like once or so a week, you probably don't see them that often. Just keep it over there. So yeah, it can, but then again, it's like the thing is like this doesn't it doesn't like it doesn't change just one part, it changes all of it. So the creek is like in a completely different place sometimes. And what I found is that most of the time it's like it's pretty comparable anyways. So what I mean is like if you charted a creek in extended hours and then you put it on regular trading hours, it doesn't look like it's in the right place at all. And that's true. So then if you do it in regular trading hours, you probably say, well, it needs to cross here. Most of the time, if the especially I think with large institutional investment, most of the time that's almost always like in the right spot anyways, whether it's regular trading or not. So it's like trading a different chart that has a lot of similarities, but then like the interim is different, but then the end result is often pretty darn similar. So like if I were to go back to extended trading hours here, all of these creeks are probably going to look wrong. But my guess is that this area right here would be right for some other reason, you know. Maybe it's not this creek, but maybe it's another one, you know. So it's like things like that. I just found it's a little redundant. Maybe that's the better way to put it. Maybe redundant's the right way to put it. It is a little bit. I've never really seen anything that's made me think that aside from like a few crappy moves that just or unfortunate for options traders like myself, aside from that, it's not really much impact on the TA. I've had a couple instances where I get really concerned about something, but it doesn't usually yield any kind of fruit. Like that happened on AMC. There was a big weird upthrust back here somewhere. I think it was like right here. And it looks like bearish. So like if you look at extended trading hours, it doesn't look good. But in regular trading hours, it was okay. It is bearish. I mean, it did go down, but it was like super crazy high, you know? So I don't know. Did it help? Maybe it helped somebody. Maybe it helped measure out that move down. I think it was like here. But you could also have found that move otherwise, like in regular trading hours. So I didn't find it to be particularly helpful. It just kind of makes everything look crazy, you know? Here, I'll show you what I mean. I think it was back here. Yeah, there's like this one. It was the wrong one, but this one. That looks really bad. Honestly, that looks like a bearish action because it comes all the way above this previous top. That would have led me to think that this is potentially very bearish, which I don't understand. On the other hand, when you look at this and you see this, again, it just looks like a really big upthrust. It doesn't really make any sense. But it did eventually kind of lead to this moment, which could be considered a bullish breakout moment. So, I mean, weirdly, right? And you bring it back, you're like, oh, it was kind of weirdly predictive of where that end result might be. But in the short term, it didn't really make any difference. It was kind of misleading, I guess. I felt like it was. It looked kind of bearish. So I think it changed. Like I said, it changes creeks. It makes things seem like they're in different places. But the end result is like, that's a breakout. Well, we already knew that, you know. We didn't need extended hours to know that that was breaking out here. But you could have used them. It's much more relevant for things perhaps like the S&P 500. And then the other reason I don't use them is because I often flip between time frames. I know I'm going on and on, but there's a lot of like little, I talk myself into these things, I guess. And I don't like going between like a extended hour time frame and like the daily, which doesn't include that. And that really bothers me. So I feel like the daily and the weekly are probably the most important time frames that we have, and they don't use extended hours. So that to me is a big problem, right? Like if extended hours were that important, they should be included. I don't know, somehow. I don't know how they would be. You don't have extended weekly hours, but let's see here. So I think in order for this to be successful, I may need 2910. Let's see if there's any evidence of that right now. There's this one. Yeah, that's pretty good. None of that's lower though. Well, a lot of what I learned from in the last few years anyways, talking to a lot of people, but a lot of it was learned from Stockfather talking about Wyckoff and institutional traders. And institutional trading is predominantly long term, whether you're a short or a long, it doesn't matter. You would trade over the course of years. So do after hours moves really impact what happens over the course of years? Probably not. I mean, it impacts some people because they probably get different kinds of trades and junk in extended hours, but I don't know. I've seen people make good arguments for it, though. I think it's a preference. And certainly if the market ever goes to full 24-hour trading, there's not going to be extended hours. It will matter, of course. So I'm glad it's going down right now, actually. I think that's a good thing to some degree. It's nerve-wracking. I wonder. Yeah, maybe. It's probably pointing to that area here. There's something about this pocket right there. So maybe what we will see I'm pretty sure that's probably just the S curve, but maybe we will see some kind of a inverted 618. That's the 618 right here, which was the idea that we presented of like a cat ear, so to speak. If it did that, it would be maybe there would be a potential then for this to come all the way back. It's really low, but I don't know. I have to check that big picture. What would that do? I'm in upside down world, so it's kind of weird. I'm trying to think like why else that might happen. Well, I can't exactly just jump over that. Like an inverted cat ear could do all kinds of crazy stuff right here. But you can't exactly just like jump it and expect no repercussion either. So this could represent more of like a pivot point on a high, which also works. So it's not actually going towards that target. It's really just there to gosh, we're like right on it. We really are like right on that move right now. It's from that big creek cross to the next one. Oh man. None of this is particularly impactful like long term. Unless something weird happens. There's this one. Maybe that's where it's trying to get back to. Hmm. This could be a kind of like ABC correction, you know? It's hard to say. Timing here is tricky. Well, in any case, I wouldn't look at any of this as a. I said this is like a sign of weakness realm because it's the upside down chart, and it is. If it pushes back up here, that means it's advancing. I really would prefer it not go back below 28, though. I mean, at the end of the day, that's still an important zone. I wouldn't really want to see it go beyond there. Anything less than that or above that is not a big deal at this point. Also, looking backwards, you can see in the upside down area, like as an upthrust, this would make sense to kind of push up through this area and then drive the price backwards. So I'm just trying to figure out if I'm missing something before close here. Of course, kind of too late at this point. Not really. Well, there it goes. Let's see what happens. So to me, GME would do well to have a what's called an upthrust right here, but in reverse. Basically have like a push down and then invert the other way. I think it would do very well if it did that. So have like a spring and jump the creek. I would be less excited if it went up immediately, but that's mostly on the basis that I think then you could have a potential for some nasty downside later. And there is still that potential, but it opens up more possibility for it if it goes up first without that dip, which isn't what people always want to hear, but that is what it is. Yeah, I think there could be some real strength here if it drops and opens low. Maybe an extended hours back test would be enough, but it'd have to be decent volume. I don't know. Flipping the chart didn't really give me a whole lot more information in this case. And then there's nothing really wrong with this as long as it, this is kind of confusing because this looks like I'm saying it goes down and back up and down again. That's not actually what I'm saying here because what I'm saying is that it could be that this doesn't come down till later if you don't do it now. It's complicated. It's not impossible this bounce happens that way, but it would be weird. Because right now, all this really would represent to me anyways, if it went backwards, would be like a back test on this creek and a spring possibly. As long as it doesn't come below 27.44, I think it could be pretty strong. Especially if it stayed high up here and went to just like 28. And then I'm looking at like this conservatively thinking, well, it doesn't really have to go that low in this range. It doesn't. It could probably stop even before it even goes low. And a drop there would be good. So it's just kind of a mixed bag. Those levels are important and they're not super negotiable in terms of like long term what that could mean. But I wouldn't be surprised if we got a spring. I guess that's all that really comes down to. And we haven't made a creek jump yet, so we're not there yet. So in the morning, we'll see if it has the strength to kind of, no matter where it opens, if it's low, if it rips up to the upside, or if it's up, see if it has the strength to hold above there. Once that happens, you've got confirmation, and then you should have a pretty good chance of running if it does that, at least up to this zone around 33. And then looking at it again, you'd have to see kind of a secondary action perhaps. And I've got it going kind of slow, but tomorrow could be potentially quite fast. And who knows, you know, this could go really, really quick. This is just really slow version of it. But yeah, we can see something like that. And if it distributes, then I think it probably comes back at a later time. So there's a lot of if-then statements here because I don't know what's going to happen. Tomorrow, if it opens high and there's a gap and we just run up, then I think it's more possible that you may need to come back down later, right here, right, next week or whatever. That gives it a lot more possibility that you're going to capitulate potentially. If it does the downward motion first, I think there's not as much of a chance that this is going to come down later. Does that make sense? So we're just going to have to find out. I haven't looked at charge point in a while now. I still have it. I still own it, but it's been mostly just chopping and having very little, if any, success getting back over $1. So it's not been my favorite to look at. Tomorrow's a big day for the market, I think. Well, good news, bad news, I suppose, for AMC, because it didn't do anything, which is kind of both. It's kind of struggling to keep itself up. There's not a lot of strength here in some ways, and so I'm a little bothered by that. It looks like a hook end of day, just visually, but it didn't make any kind of run up to the 350 mark. So that's actually good. I like that it came down, and it does seem like it had a creek cross right there. So it may be in a good spot to run tomorrow. If it did drop, would it be the end of the world? Nah. I actually think kind of like GME, maybe it doesn't even come that low. Probably come to like 328 or something if it did drop. Worst case, this is like a halfway point and it comes all the way down to like 311. And it does have a lot more weakness than GameStop, so just keep that in mind. Don't be surprised if it's like real low if they both drop. But technically, this jumped over a creek, failed to make an advancement again, just like it did here. It's like a micro version of the big picture, honestly. It's exactly the same. So, we'll see. Yeah, there's the drop. That's good. Is it? Well, thus far. This is where we were expecting it to maybe be. Let's see if it goes further. Did it whiff or what? I don't know. Silly thing never updates in time. I always forget where the news thing is on here. They beat. Okay. Yeah, it's dumping. Well, this is just one of those that, again, like I don't really find this to be extremely controversial, but I guess you could. It's just one of those where, like, yeah, the extended hours doesn't really give you the same picture either. This already dropped down to 27 in extended hours. So I'm more interested to see where it opens up tomorrow than I am right now. See where it drops to. So, because like I said, it even if this dropped really low, if it opened up at like 29, 30, that'd still be on point with what we expected in regular trading hours. So there wouldn't be anything wrong with that right here. That's where it's kind of gravitating towards because of that support. It looks like they may be going back towards this gap zone to trade it in extended hours, like trade down here again. And the last time we traded here, it was going up, so we'll see. This is not something I typically worry about. I really prefer to wait because if you sit here and like watch it drop, you're gonna feel bad. But it's leaving a gap, so if it ends up dropping and gapping down, we'll see what happens in the morning. AMC is not really moving, so that's fine. I'd rather just see where it opens up and what happens. The only thing I didn't talk about was like a hook, and I guess it's possible, but if for some reason it opened really low and it hooked here, I think I had it on the chart and I just got rid of it. But that would be a different situation altogether. Any kind of low opening, in my opinion, could be really, really bullish tomorrow. So we'll just wait it out and see what happens. Although I do wonder if that truncates the move a bit. Like I wonder if you could do the same kind of pump off the same level. Where would that go? Like if you for whatever reason you opened up like way down here. I wonder how far that takes you. At what time, I mean. So, yeah. Be better to open there. I'm pretty bullish on it. No, I'm not streaming the earnings call, so I'm about to get off. Enjoy it. If you want to watch the earning or listen to the earnings call, I'm not doing anything like that. I don't even know if they're doing one. It said they beat, so that's good. And I prefer a drop here, to be honest, so I'm happy with that. I know it's weird, feels backwards, but I actually think this is better longer term. That's my assessment of it right now. We'll see what happens by morning. Things can always flip around really quick. But I'm glad it did the move down first, not pumped and dropped, because I would really not like that. I'd rather see that drop and pump. That's me. Yeah. I'll be back first thing tomorrow. I'm not going to be able to stream very much tomorrow. Probably just the first hour or so. But I'll be back. I'm done. I got to go. You guys have a good one. We'll talk to you later.